Certainly is a very challenging environment for investors these days. So we have some recession-proof investing advice from Manisha Thakor. She's the co-author of My Own 2 Feet. And Mike Rubino, he's the president of Rubino Financial. Welcome to both of you. Nice to see you again.
Great to be here.
Good to see you.
Manisha, I'll start with you. You lay out 5 points for us. Stick with your 401k, minimize cost and taxes, don't panic about volatility, harvest your tax losses, and upgrade your financial knowledge. In terms of sticking with the 401k, one of the things that we're starting to see is that companies are starting to take away that company match. In this environment, without a company match, does it pay to still invest in your 401k, or should you be looking elsewhere?
It absolutely pays. If you are in your early 50s or younger, it is a no-brainer. Continue to contribute. If you liked your 401k at Dow 12,000, you should be loving it right now. And if you're uncertain how to invest, a target date retirement fund is a great option. If you want to get conservative, if the doom and gloom talk is scaring you, be conservative in your taxable portfolio, not with your retirement account.
Let me ask you something about the target date retirement funds. I don't know if you saw the Wall Street Journal today, but they take issue with the target date retirement funds because of dual expenses, the underlying fund expense, and then the overarching management fee. And they make the point that unless you do an awful lot of research, you could end up in a target date retirement fund that has the wrong mix for you. They maintain it takes more work to do a target date.
I don't quite agree with that, but they do bring up some valid points, which is all target date retirement funds are not equal. But if you work for a large corporation, hopefully the HR department has already honed the group of funds, and the options that you have available to you are solid ones. My biggest concern is that people are so scared that they're just running away from equities entirely in their retirement accounts. And so the one downside about target date retirement funds that they may be too heavily invested in equities for a lot of people probably isn't going to be an issue in this environment.
Hey, Michael, we could have used you last half hour. You probably heard our interview with Nouriel and with Nassim. They are kindred spirits of yours in that you're negative right now. You think we're still going to see a downcline. However, you still believe we can make money. How do you make money in this environment? What do you put your money in?
Well, I think you wait for things to stabilize a little bit first. But coming out of this, if things do improve, which we think they will for a short time before they really get bad again, we like energy. If things improve, energy's got to go back up. It's also good terrorist insurance, unfortunately. We like natural resources. Gold and silver looks really good right now. China and emerging markets have much better balance sheets, I think, than our government. So I think there's some potential there. And if you want to be risky, again, aggressive investors can look at financials, I think, pretty soon, and small cap, and round that out with some corporate bonds. I think you'll be fine. But
you're waiting for another leg down, though. I mean, is this a short-term trade, or how long do you hang on to these?
Well, I think this is going to be the next up leg that we do get before the real big downturn. Mr. Rubini was real good at, I think, telling you what was going to happen. I think that's going to happen. The baby boomers are going to become baby doomers because they're just not going to come back in droves to the spending habits they had before this whole thing started. And they're in that time in their life when they naturally do spend less and save more.
Okay, I got to go, but Manisha, you're looking very troubled there. What do you say to Mike?
Well, no, I mean, I agree. I mean, I think this is the issue. We are in a period of extreme volatility. In 2008, there were 18 days when the market was up or down more than 5%. You'd have to go back over 5 decades to collect the same kind of volatility. And so I think people really need to put their seatbelts on, keep a bottle of Pepto-Bismol near their side. We really are in a different kind of environment, and people are going to have to learn to save.
Okay.
Which apparently are right now as well.
Thank you both. Yep. Appreciate it very much.